A little bit sick today, but we're still going to give you guys some technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and NVIDIA. And we're going to get into yields, TLT, and the VIX at the very end. But the first thing we need to do before we get into all of that is look at the data ahead. The data that I'm really paying attention to next week is going to be Tuesday morning, 8:30 a.m. We actually get the CPI and we get the inflation rates. Okay, so all of those things come out on Tuesday morning, and I really want to pay attention to this because everything is supposed to either come in at consensus or come in lower. Okay, so if we actually see an upward move in anything to do with this category here of inflation, we're going to see some selling step in, because right now people don't believe that Jerome Powell is serious when he says, hey, one piece of data can steer us into another rate raise. So I believe that if we do see some upticks in inflation, we will see a dramatic sell-off. Now, the next day, I want to pay attention to the PPI month over month and retail sales, and both of these are supposed to come well lower, as you know, they're supposed to come down as well. So I really want to pay attention to these on Wednesday, and if these all come in higher than expected all at the same time, that can really shake up this market, and we can see a heavy dip down. Now, I'm not saying that is supposed to happen. I'm not predicting that it's going to happen. I'm going to react based on this data, but I just wanted to let you know that people don't see another rate hike in the cards, and Jerome Powell has really tried to sound hawkish and be like, I will raise rates again. So if this data comes out as hotter than expected, we can see a very dramatic sell-off. The SPY is telling us one thing here, and that is that we're outside of the monthly range. So we're outside of these yellow lines here, and this is our monthly range for November. We're not even halfway through November, and we're outside of that at this point, which is something to pay attention to, especially before data is released. That means that options didn't predict this was going to happen, but maybe they could predict that we are going to come back into this range, as we do 64% of the time. Now, I have updated the weekly ranges. That would be the purple lines that I have here on my chart. And you can see that they do not have priced in a big move at this point. And when we get outside of that range, yes, 64% of the time we come back in it, but the other percentage of the time, we actually can see something volatile happen, something crazy happen, which is where you get these extended moves. Okay, so the fact that they do not have that wide of a range posted for next week tells me they don't see anything very volatile coming in. The implied volatility is maybe too low. And therefore, if we get some kind of bad news, you can actually see this breakdown from this level. Okay, so we want to pay attention to that, but I would just say this is a very bullish move. And if we start to get outside of this weekly range early on, say Monday or Tuesday, then I would really be looking for this to start to turn back around and get back into this weekly range by Friday. Now, this is a good learning opportunity to see how when you know a divergence is not going to play out your way. And all we saw here was we were pointing out, hey, there's divergence here. There is very big potential at this area for us to roll over and start to get into negative territory on the MACD and start a negative trend. The only problem with this is as we get into negative territory, you see it turn back up and get into positive territory, and then we see that trend continue. Okay, so until this is able to hold down into negative territory, we won't see this turn around. So I believe that with data coming out and the importance of that data, these things are starting to pile up. We're staying close to that center line. If we can remain down in that negative territory, I'm expecting a good sell-off, but that hasn't come to fruition yet. So as long as this remains in positive territory, you have to stay with the trend. Qs here, we can see we have the same problem as the SPY. We're getting outside of that monthly range, not even halfway through the month. Okay, so we could pull back into that range before the month is over. That's just important to note. And we do have that weekly update. So if we do get excited, I would be paying attention to that level of 385.07 to hold as some resistance, which actually lines up with our gap fill and our high from, what is that, from July. Okay, so we want to pay attention to that. Now to the downside here, we just wanted to say, if we do get some kind of sudden downward move, say this week or going into next week, then I would just say at this point, I see this as a good sign that we are making a new high and we're about to start a trend because we just took out the previous one. So I do believe that this coming up to this area is good news. And if we can just see some kind of pullback from this area and remain healthy, then we can see, you know, a dip down into these levels of about that 358, and then we can see us start to continue this positive trend, making a higher low. The SPY, we showed you the 30-minute. For the Qs, I wanted to show you guys the hourly, and we can see that divergence starting to form here, and it hasn't confirmed yet, but we do see that divergence, and overall, that's just getting the hourly MACD close to that center line, which means we could see this trend start to reverse very soon if we're able to remain in positive territory. So I just wanted to point this out to you because the 30-minute can be a little wonky, but the hourly is pretty good. And right now you do have that divergence setting up for you on the Qs and the SPY. Apple, we knew that a big move was coming because we had that triple divergence, okay? Once you get that triple divergence, even if you got your entry point here, you can see that extension upward. And overall, what I was saying was I'm leaning towards us pulling back to this zone before heading higher to take out this zone that we've sold off from over and over again. We've seen dramatic sell-offs from this area, so I thought if we get excited and get to that area, we can see a dramatic sell-off, and that's exactly what's happening. So the fact that we're getting up towards this big resistance zone, this gap fill, gap resistance zone, then we can see dramatic sell-offs from here, and maybe that is to scare some people out, set up some kind of higher low, and dink the top of our purple zone to get an even stronger move going into the end of the year. Apple on the 30-minute is giving us this clear-cut divergence on the MACD and the RSI at the same time, so we have to pay attention to it. And the overall thing we need to pay attention to here is exactly what we were saying with the SPY. If this rolls over and is able to remain in negative territory, we can start to see Apple start a negative trend. I'm saying start too much, but we can really see it begin a new negative trend if we can remain in that negative territory. Okay, that's what we need to pay attention to here. But if we see it roll over and then roll back up into positive territory, then you might just be getting some kind of minor pullback in order to head higher to get into this zone. So those are the two things that I'm really paying attention to in Apple, but it's all just to do with if we can hold down in negative territory, or if that MACD is able to curl up one more time and give us another signal that we are seeing that trend continue. And Tesla was one that I was a little more worried about because it's not really extending higher, and we've gone through this for quite some time. And so that just means if we do get some kind of sudden drop, you actually could see this low taken out, and maybe we go test that level of about 190.10. But as of right now, you're holding up at an area that could be our left shoulder in a head and shoulders, and we could see this move start to extend upward. We just want to be aware of that, but I also just wanted to be aware that on these shorter time frames, like say an hourly, we are still in negative territory. And though you could have divergence across the board or something like that, when you are in negative territory, the trend can continue downward. Last thing on Tesla, I'll just say maybe this is just a move like this. Maybe this is an ABC pattern, and we're going to see this base out somewhere around this level right here, which actually lines up with some liquidity. Okay, so some buyers were in this area in order to push this higher from that zone. So we can pay attention to this level right here and say, hey, if this is some kind of ABC pattern, we're going into a bit of liquidity. Maybe on an even shorter time frame, like a 30-minute, I will see some divergence and I can take some kind of trade. So that's how I'm going to look at Tesla. But I just wanted to also say that it does have the potential, because it's in negative territory and it hasn't bought up as much as other stocks, to break this low and come down to that area of 190.10. Okay, so I just wanted for you to be aware of that possibility. Amazon's getting a very, very strong move. And how did we see this coming? Well, we just noticed there's divergence here on a daily, and daily divergences are very, very strong when they get into positive territory on the MACD. So we're getting that super big move, but at this point, you're starting to see some doubters step in, right? And we're able to go up to this high. Maybe we do even come up to the previous high over here in September, and we're able to test this level of about 145, 145.50. That's pretty much as high as I think this will go. If we do beat it, I'm targeting that 147.10 area. But I overall think that we need some kind of pullback, and the 30-minute here is really telling me that it wants to pull back from this area. And just because we're starting to get really close, and we're sitting really close next to the center line on the MACD, meaning that this trend of upwardness can continue, right? It can continue if we're able to roll up and start to, remain in positive territory one more time with some kind of small pullback. But you can see right here that if we do roll over, we're going to immediately go into negative territory on Amazon. And that negative territory can mean that we're starting a negative trend, meaning this can start to go like this, meaning this positive trend can stop and a negative trend could start to begin. And from this area, we can just notice that we do possibly even have some kind of double top with that divergence proving between those 2 points. So those are the things I wanted to point out on Amazon. And it really looks like we are going to pull back this week. But unless we get some kind of big data, that pullback could be very short-lived. Okay, NVIDIA, I'm just going to go right into a 2-hour and just say this is good news. You're making a new high. You're kind of invalidating this as a right shoulder, if you will. So at this point, you could just say, hey, this is my high. This is my higher high, and now maybe I'm going to start to find some kind of higher low in order to continue this move. And this is why I have the 2-hour up. For continued moves, the 2 hour is pretty good, and you can see that roll over. And if it doesn't remain in positive or in negative territory long, if we see that roll over, then it comes back into positive territory. You're probably, the probabilities are leaning towards this move continuing into the future and going above this high. So I wanted to point that out on NVIDIA. And how did we know that NVIDIA was going to bounce from here? We were paying attention to this 2-hour divergence at these lows. So you can see that divergence down here on the MACD, down here on the RSI, all at the same time. And that just led us to believe, hey, we're going to get some kind of pop. And guess what? We get some very good news. There's daily divergence as well, okay? So when you have 2-hour and daily divergence at the same time, it can mean that a very strong move is coming, and that's exactly what we got. But you notice this is just a stair-stepping move with not a lot of pullbacks. So we do want this to digest, and this could just be that stairway to heaven that ends up dropping to hell. And I say drop to hell because I think people are really going to think this is some kind of crash, but I'm just paying attention to this level right in here. I believe that this level right in here, somewhere between 437 to 420, is a very good area to pay attention to NVIDIA for that turnaround. But overall, all you have to do is see the 2-hour curl back up and remain in positive territory on the MACD, right? And if it remains in positive territory, you see that confirmation, you can start to think that the probabilities are with you. Hey, this might make another leg higher. This is why I was so worried on Friday when we were seeing green, because you're seeing that though we're getting green, we're not seeing a drop in the 10-year yield, which just tells me that, hey, maybe we're not, thinking of this data correctly. And overall, the data to me looked very bearish, but people saw it as bullish and they go higher. So right now you're seeing yields go up while the market goes up, which usually isn't a good sign ahead. What we're paying attention to here is to come up and test these type of levels at 4.87 to then drop back down, creating that head and shoulders, forming that head and shoulders, and then we see the former breakdown. But I believe this upward move in these yields may be caused by some data this week, could scare a lot of people out of this market right before maybe we get some good piece of data or something like that, and then we see this start to subside. This is where on that Saturday video that we pointed out the difference here, okay? You see the difference between the SPY. The SPY is going up like this, while TLT is actually backing off like this, and that is usually a very good sign that smart money is not buying into this move, and the dumb money is actually the ones pushing this market higher at this point. Maybe it's some people who are late to the party and want to get FOMO'd into a move, and I can just tell you right now that when I see this difference between TLT and the actual market, I start to really put the brakes on if I'm bullish. Now, what could be setting up here is some kind of slanted head and shoulders. So I'm really paying attention if we actually do see this dip down, maybe into this level right here of about $85, that we do get some kind of right shoulder to carve out and we can see that upward move start to come, to fruition. The last thing is the VIX here, and the VIX is making this downward move while the VVIX, which is the volatility of the volatility, is actually making an upward move, which doesn't tell us, hey, there's definitely some volatility coming. It says there is potential volatility coming this week, which just tells us we need to pay very, very close attention to the data that's coming out this week and how high we've come without some kind of meaningful pullback at this point. Just tells us that, hey, there might not be that much room to the upside. There might be room to the downside, but we do need bad data in order to get a volatile move. I still believe that the VIX here has the potential to come up above 50 before the week is even over and then start to subside. Okay, I really think this could be a sudden move to scare some people out of the market at this point. Could take up to 1 to 2 weeks, but that's what I'm leaning towards until I see indications of something otherwise. That is my belief at this point. The good part with that is you would still have some kind of head and shoulders, right? We would still have a left, a head, and maybe a right shoulder, and we can really start to see this come down, closing again below that 250. At this point, you have to say, though, that we are bullish, okay? We are very bullish because we are seeing price close below the 50 and the 200. The only thing that I'm saying here is if we do get some kind of sudden move upward and the 50 crosses the 200, what you need is that the VIX to hold above the 50 to hold above the 200. Okay, so if we do see the 50 actually cross the 200 and then start to come right back down, then that's not necessarily your crash indication. Your crash indication is if the 50 is able to remain above the 200 and start trending upward. Now, real quick, just to show you guys, beginning in the week, we could actually see some volatility is because the VIX is actually holding right at that center line, okay? Even though it is negative territory and the trend could very well continue down, we can keep seeing bullishness. If this does turn around and is able to get an explosive move and remain in positive territory on an hourly, that's when the negative trend can start in the market, okay? It's just something to point out, the importance of this positive territory versus negative territory on an hourly MACD. Sorry, my camera's a little wonky and that I'm sick, so my voice is kind of giving out at times, but thank you guys so much for liking, subscribing, and commenting, doing all those things. Let me know if you are interested in the Patreon, but the overall takeaway from this video is we are going to need those shorter time frames to start remaining in that negative territory on the MACD to start a downward trend, and it really looks like we are going to get some important data this week that could shock up the market and even surprise the options market with their weekly range. I I hope you guys have all the luck in the world trading this week. Peace.